Good evening, ladies and gentlemen. This is Clueless Trading. Frank, it's approximately 8 minutes past 8 p.m. Eastern Standard Time on a pretty muggy evening here out on the East Coast. This is the weekly strategic market update webinar, and I'll try to keep this short so that other members can listen to it when it's uploaded to the Clueless Trading YouTube channel, accessible to anyone out there for all the free videos and video blogs, what we call video casts that are uploaded there. Feel free to listen to it at your own time and hopefully before the market begins tomorrow. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. So tonight what I intend to do is walk people through, and I've got a couple of requests on that, what I call the Algo HFT charts. They are run on a platform called Quad, Quodd. Some of our members utilize Quad very effectively. And if anyone has any interest on doing the free trial, and keep in mind, full disclosure, I have nothing to do with Quad other than the fact that I've been using it for more than 12 years, since my Wall Street days. And I pay a monthly subscription fee, and Quad was excited to know that Clueless Trading members were interested, some of them. And so they've given a heavy discount for people to try them out. And if they feel that it's effective, which I think is very effective, as you guys all know, I've made people a substantial amount of money on triggers on these particular charts, both on the indices, on the SPY, the SPX, individual stocks, using the Quad Algo HFT platform, charting platform. It's a very comprehensive platform, and let me know and I'll send you the link and you can directly speak to them and they give you the code to do the free trial, I think for 2 weeks or whatever, and I think everyone should do it. Okay, so I'm going to walk you through this particular platform and how to read these charts very quickly, and for more detailed analysis on how to really trade this robotic and in my opinion highly profitable charting mechanism. Do sign up for the advanced coaching sessions, which many of you have, the ACS sessions. Some people ask me where to sign up for the ACS sessions. Just go on the website, look on the top under members content. There is a members area. Once you click that, and right there is a big banner, and it says Clueless Advanced Coaching. Click that. Just pick any time, doesn't really matter, and just sign up for the 5-pack group sessions, or in some cases, some people prefer to do the one-to-one private sessions. That's it. Okay, so before I go further, let me cover a couple of bases. It was quite an eventful weekend, nothing bad. Futures are up roughly about 4.25 points. The Quad system, I do not, I use Thinkorswim for tracking the futures and live updates on the market. For the Quad, this is not real time right now. I mean, sorry, pre-market and post-market. Post-market, it does show, but right now, it does not pick up the futures market. All right, I haven't subscribed to that because there's no reason for me to pay that extra while I'm looking on one of my other screens and looking at Thinkorswim showing me what the futures are doing. So just keep that in mind. These are static charts. These are not dynamic charts because we are not getting the futures trading on these particular charts. Okay, that's it. So there is no ES here. Important stuff is President Trump is whizzing through Europe. I posted some important articles. I'm not going to go in too deep into all the nuances of what's going on and this and that, other than to say that overall, the markets are looking at it as somewhat constructive, despite the fact that he's bashing the Europeans, the European Union, and some of the wordings are quite inflammatory. And I'm no fan of the EU, European Union, but then at the same time, they are our allies, no question about it. Anyway, he's having a very important meeting behind closed doors, one-to-one, mano-to-mano, like we say in New York, and with good old Vladimir Putin. And I'm sure we're going to discuss important stuff on global relations and stuff like that. Okay, and So whatever your feelings are on that, the reality is President Trump is doing it. And in my opinion, it's good to talk to everybody. There's nothing wrong with it, in my opinion. And despite the fact that the Russians hacked everybody, not just the DNC, the fact is that I've always said, and I have a lot of good Russian friends in New York, trust me, in a very high level positions, and they just laugh at us because we're a bunch of idiots compared to them when it comes to the hacking part. Trust me, okay? And so bottom line is they know what they're doing, and the market seemed to kind of whiz along. And that's okay with us because we are geared towards only one thing. I've always said, if you focus too much on the politics and the emotions of politics, you're not going to make money in this market. Okay? And given everything that's happened, we should be down like 2,000 points, right? But I've walked you guys through every single nuance of it, and I'm telling you what the markets are going to do, and the markets are doing exactly that. No one can deny that. No one can deny that. So U.S. business, in my opinion, is the ultimate arbiter of financial markets, and U.S. business is doing very well. Now, if the trade war really blows up and it goes into a full-scale conflict, I can assure you, we are not going to be sitting here. We're going to be way lower. But that is not the case. There's a lot of game theory being played out, a lot of back and forth. China is now willing to, not just China, we're willing to resume high-level negotiations with them. And regardless of what good old Donald does when he bashes the Chinese to kingdom come, and the Chinese retaliate back, the reality is they are having a lot of closed-door talks, okay? President Trump and his family make a lot of stuff in China. They do. Ask Ivanka, okay? And so does he in some of the merchandise. But you know what? Those are small fries. The Chinese are also tough negotiators. There's no question about it. But net, we import obviously because it's a global supply chain, cheap labor out there in Asia, and that's just the nature of economics. Okay, people gravitate, businesses gravitate. That's a law of business. Gravitate towards where there's cheap labor, but there has to be a balance. They have to open up their markets, in my opinion, far more for U.S. goods. And so that when you're buying a U.S. car, it doesn't cost you like 40% more. Believe me, I've traveled around the world extensively, and I know. You try to buy a Ford Mustang here for $40,000. You try to buy it in Europe, it's going to cost you 60, 70,000. You try to buy it in China, it's going to cost you 80,000. So why? They need to basically do that, and they do that for their own domestic economics. But those are the things that we're fighting for. There's no complete right or wrong. Just remember that. It's a lot of gray area. And that's what's known as that's life, that's trading, that's business. There's a lot of gray area. We like to demonize other people. Other people like to demonize us. They're bad, we're good. Mature, intellectual, and I would say sharp-minded, doesn't have to be intellectual. No, very well. That's a hogwash. There's a lot of middle ground there. Okay. So saying all that, lots of optics, lots of theatrics on the outside with the headlines and stuff like that, but the markets are doing their thing. That's really what we are concerned about. At Clueless A Trading, we have performed tremendously. We have delivered goods in the midst of the most volatile markets. We have delivered content which have come right. We have delivered content in the midst of sell-offs that everybody's just completely bunkerized, all the way deep down. Okay, and yet the market pops up and moves forward. And then right when everyone's too happy, whatever the case, and I'm showing pullbacks, and they're happening. Am I right every single minute? No. Am I right overall? That is the value-added service that Clueless A Trading provides. Okay? Now, saying all that, it is a very volatile market. You always have to be prepared, and that's the reason why we trade charts and not our opinions and emotions. That's it. Somebody gets way too excited, trust me, they're going to lose money. This market's not going to the moon. It's just going to certain levels where it needs to go based on these tactical formations. And that's what we're here to discuss. Aside from that, earnings season, full blast on us. Banks delivered. They went down. Yeah. And Bank of America is coming up. Now, just because JP Morgan kind of like remained flat to slightly higher than down, and I think PNC was the only one that was up. The reality of the situation is that it's case by case, and if the market and if something runs up way too much prior to earnings, Simple rule of the thumb. Unless they have blockbuster, stellar guidance, not just earnings, because that's what they're looking for, forward guidance based on all the international strife that's going on and the trade stuff. Unless they deliver blockbuster guidance, okay, or just numbers and their business is flourishing, the market is going to hold them back or pull them down. That's just the way it is. So I prefer something that doesn't run up, in my opinion, as the earnings plays. Now, on the earnings plays, well, I'll cover again in the next webinar. Probably going to be doing one quickly on Tuesday. Is the fact that there are different ways to play earnings. You can do a straddle. All I know, you do it with small amounts of money. Don't go hog wild on something because it is always a toss up. Now, chart sometimes does dictate, and I have a good feeling. My overall earnings records, playing ER as we call it, trades, have been pretty damn good. I think it's a good 60 to 70% hit ratio. I would say so. And the big ones really are the big ones, up 30, 40, 50, 60, 100 points. We've done that for years now. It's all there. If you want to dig back and look at what we have done. But I always like to play earnings because it's like, it's great. It's fun. So you got to do it with small amounts of money. If the options premiums are bloated to kingdom come, hey, I can't tell you what you need to do. Just do it, do a straddle, do some sort of option strategy. And I'm not going to sit here and recommend that other than basic straddles where you buy a put or a call and you can devise your own strategies. Okay. My business is not to give you heavy duty option strategies because I'm not that knowledgeable an options geek. I'm a great market forecaster. I think I do a phenomenal on showing you where stocks can go, and things like that. Catch a 70-point run on Tesla, things like that. But if you want to be an options geek, refer to, just use your own devices. There are great people here who can suggest option strategies, and I highly suggest that they put some of their strategies in the trading room or in the public chat room so everyone can benefit from it. Don't come after the fact and say we did that because no one really cares if what you did after the fact. Tell us beforehand. So highly, highly encourage anyone who's got any ideas to put out there. It's not, help. We're here to help everybody out. So I'm showing you. So that's earnings season. Full blast coming up this week. Netflix, I believe Amazon's on Thursday. There's tons of them coming out, and you're gonna catch some big ones. So the simplest rule of the thumb. You always got to be involved. I don't care, if it's a $2 call or you're paying a $7 for a call. Don't buy them way out of the money too much because you're not going to get paid. And sometimes you do. I remember people bought price lines like 100 points higher. I didn't. I paid up for it. And the stock was up gazillion points. And this happens to a lot of stocks. And you get a win. But to me, I rather buy close, ITM in the money, close to the money, look at the IV, on the big stocks, it's normally 20, 30 points. They move 5%. Let's just put it this way. Big stocks don't move 10%. Sometimes they do. Amazon did at 1.8%. That's a lot, right? Those are the $80, $100 moves. But generally speaking, bear with me 1 second, please. Bear with me. Sorry for the interruption. Okay, that was my little doggies. All right. So bottom line is keep it small, stay involved. I do select earnings. I don't just randomly go out and buy everything. I have a good knowledge of those particular ones that I'm recommending. And by the way, who's Joey? I asked and nobody answered, so I might have to boot Joey out. I'm not quite sure. So anyway, hi Exita. So on the earnings side, yeah. Just like I said, if the best ones are those $2, $3 calls, and you buy whatever you want, but don't go nuts on it. You can buy a basket of them, like one here, one call here, two calls there, and say, okay, I'm going to risk $500 on this tonight, and if that 500 works, maybe one of them goes, and Joey left. Great. So bottom line is that Joey, he is here. He accidentally only messaged me. His mic is broken. Now, who's Joey? Anyway, I don't want to bother with this Joey stuff. It's killing my thoughts. Okay, JB, keep your Joey stuff on your own. Okay, so bottom line is that there are people here who actively play earnings. I know my good friend JB does, and I like that. Because you got to be in it to win it. It's just the way it is. Okay, I don't just keep on talking about that. You got to be in it to win it. So when people just sit out looking for certainties, and I'm not forcing anybody to do anything. Hey, I'm putting phenomenal content out there. You want to participate in it, it's up to you. If you don't want to do it, it's up to you, because it's a free world. But so what I'm talking about earnings part is there's such great moves that we have gotten on earnings, so many of them, and some blow-ups too. But even the blow-ups in general bounce back. So I don't like to play necessarily like with 2 days left on expiry, right? I'd like to buy the next week's one, so I pay up a little bit. So if I do need to cost average, which I've done repeatedly, many times, then I can do it, and I have time left. And so I would rather buy next Fridays on the weeklies, or if they're monthlies, I'll buy next month. But this month is because the monthly options expiration is the 20th, right? And then we have the following August 17th. So if I'm getting close to the 20th, and if it's a monthly options play on the earnings and there are no weekly ones, then I'll buy the August 17th. I have ample time left for me to recover. It happens a lot. Okay. So that's it. I don't want to spend the whole evening talking about earnings, but we're in the midst of earnings seasons, and we are going to basically kick butt. We will. There'll be some heartbreaks. There'll be huge winners. Overall, we're going to do great. That's how I'm going into earnings, because that's what we have done in previous earnings reporting season. On that note, let me just walk you guys through this here. So first of all, again, I don't want to get too extensive, but I want to show you these charts are simple, but they give you a lot of messaging. The simplest way you got to look at it. Okay, I'm going to walk you through the bottom. When the slow stows, and most of my members know this, when the slow stochastics gets to the bottom, 90% of the time, in fact, 100% of the time overall, within a matter of either the same day or the next day, or matter of maybe 48 hours, even through this, sometimes it's a little bit, it'll stall here for a day or two, not more than that. Okay, between 24 to 72 hours max. And the slow stows bottom, and they're starting to turn, and I'm triggering off, and I'm showing you this first, okay? And then match that with a big hammer reversal. It's just a massive buying opportunity. No questions asked. Now, these moves up along the way as it's moving keeps you in the game. As long as the stochastics are crossover up, and they're continuing, and we are getting volatility. So it's not like you got to hold it all the way. It bumps up like that. You got to gap up open the following morning. How many times have I called on a Friday or a Wednesday? Market's totally sold off. I'm showing you that it's turning. We're placing some positions there. Next morning, the futures gap up 10, 12 points. Happened way too many times. So by the time you think that, it's going to be buy, they're going to sell it. That's just the way algos work. So we are most of the times, as you all know, especially the new members, we're always one step forward. I'm on one step ahead. And that's the painful part. Like I would not just love to say, I believe in life. The pain of regret is far worse than the pain of sacrifice. Now, the pain of sacrifice means that you got to buy those tactical lows, not BTFD, buy the F dip. Those are stupid stuff that retail investors keep on screaming up. We're going to buy every low and the market's going higher. No, that's not how we operate here. So when people mention that in the chat room, I snap back. It's stop this baby BS. Don't buy every low. We're talking about technical lows. Now, there's a lot of traders who are just technically dysfunctional. Not naming anybody. Okay, they're technically dysfunctional. They don't know how to look at my charts. They've been with us for years. I can't help them. Okay, I can't help them because they don't want to help themselves. Or maybe part of their brain just doesn't know how to look at a chart. And then we have newer members, not going to name any, who are fantastic chart readers, who are clicking in fast and they're making money. And the other ones are getting lucky. They're following my alerts. It's working. They're happy. But when things get really volatile and they don't know how to manage their money. Okay? And I think that's really stupid if you ask me. Because this is extremely robotic, algorithmic, high-frequency trading, black box-driven market. That's it. There's no two ways about it. And that's how we like to operate. That's the environment that we are showing. How to read these things. And each of these levels are extremely precise. So anyway, when this gets oversold completely and it starts to turn, you better be in the trade. Long. When it goes on the top and it starts to turn down, real simple rule of the thumb, guys, okay? It starts to cross over down. We don't know whether it's going to be a dramatic waterfall decline, hundreds of points, but you better be taking your profits off the table or at least minimizing your long positions. It's that simple. The stochastics, you want the full definition of it, the formula, go to Investopedia, look it up. It's basically the second derivative of the relative strength index. It's a beautiful tool. It's worked great. You guys know that. So that's it. When it gets overbought and starting to cross over down, beware. Take your profits, go short. In a bull market, if you go short, it's because of a bull market, by the way, okay? Unless you guys haven't realized. I don't like staying short for too long because I lose money. So intraday shorts, fine. Little hedges, fine. To the VIX calls, the SPX puts, the SPY puts, fine. Those are hedges. Very minimal position, just in case. But aside from that, don't be betting on shorts too much yet. Till we reach overbought levels to the point, both psychologically, behavioral standpoint, retail traders are a little bit too giddy. We're getting there. We're getting close to there. Not there yet. And everybody's just like, rah, 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 it's going to the moon and stuff. You're getting close to the top, but we're not that. There's an article that I'm going to put out there that is going to show that despite the VIX being at low levels, the fear, which I keep on saying, the fear index is not realistic. It is lower, far lower than that. The fear index is basically at some of the highest levels, both on the hedge fund side, very minimal position, emerging market side, and of course mom and pop who just don't want to buy a stock. And they're selling their mutual funds. And correct some of my members here. Yes, mom and pop do control their money. They call up their mutual funds, the Fidelities, the Vanguards of the world, say, listen, I just want that growth fund or that S&P fund. Can you just put it in the money market for right now? I just want things to get a little bit better. The standard thing. So they do control their money. And then the fund managers have to basically sell those things at the end of the day in order to put that cash on the side just in case they ask for a redemption out of the money market. That's how it works, okay? So they do control their money. All right? So, saying all that, mom and pop is, mostly in cash at this point. Believe me when I tell you. And so there's a lot of high anxiety, which is good. It's a contrarian buy signal overall. You can see that. Look what the markets are doing. So let me get straight to this. I don't want to stay all night here. It gets oversold like this. It crosses over up. You want to stay long. Now, this, as long as it continues, even though we had this big sharp red candle where the SPYs went from 265 down to 258. That's a lot, right? That's a 400-point drop. Look what, or more than that, right? So everyone's like, oh my God, that's it. It's all over. Overall, this continued its trajectory higher. That means that was a temporary fake sell-off. But it doesn't mean you got to suffer through it. You want to take your profits at these levels and go short intraday to make some money on this, because this is a daily chart, right? So each of these candles is one day, one trading day. So even though these 2 days were very volatile, markets open up and then they pull back. That's an inverted hammer. The internals told you a different story, told you to buy those tactical dips, not sell them. And this is where the big money is made. And this is a daily chart. So then what happens? The market climbs very nicely. This is from April I'm showing you. It's happened every single time, but I'm just giving you this example. The market peaks all the way up here on April 18th. Look what the slow stows are. Now, this is not rocket science, guys. This is visual trading. You don't need to know anything. You just need to follow these lines. Gets this thing, this thing. Now, I take the time and energy to even put markers on it. Then in the real-time charts, I put arrows on. I'm going to actually start to ease back on all those arrows because it takes up a lot of my time and it diminishes the beauty, really, the tactical beauty of my charts. Big fat arrows. So you guys should know by now how to read these things. It's not rocket science. There you go. See? Then it gets overbought and stays overbought for a couple of days. Markets basically then go into a trading range right there. Everyone's like, oh my God, what's going on? Nothing's going on. In a strong market, then it pulled back. This was back at the end of May. Pulled back, did not come. And I'm watching these things very carefully for you guys, okay? Believe me. Imagine I gave no alerts and I just gave you a overall directional forecast on the markets for you guys to make money. Right there. It's worth the 70, 90 bucks, whatever, 70 bucks that you guys pay me. Trust me. So, so I'm watching this very carefully. And I see that, and again, there's a lot of stuff going on here. Okay, it's not just I'm just showing you the internals first. Then I'm going to walk you through how to read the externals, which is actual candles. So it didn't break, and the market dipped lower, retested the 34, close to the 50, and guess what it did? It went through the gap. It sliced through the gap. Everyone's freaking out there. Stay calm, and I see that it turns around. And then bang, it goes off on a multi-day run-up. Look what the stochastics does. Goes on a big high zone right here and peaks on the 13th of June, right there. 13th of June. People are a little bit too overexcited at that point. I can bet you. I've the archives of every single comment, on the chat room. I bet you it was like, off to the moon type of thing. Because we're getting close to that major top here, which we are very close to right now. I'm not saying it's a major top, but this is a pattern completion, which I talked about weeks and weeks ago. So once you get pattern complete, don't you think we get in, if the market really wants to go higher, either it's going to bust a move up towards this upper channel, or it's going to create a handle before it attempts to move higher. Anyway, so look at this. The market goes into a tailspin. So even though we have 3 green days, the bottom line is that the slow stows, just the way it was leading you to stick with the trade, long trade, it is now telling you that we are in a short trade or reduce your positions. And I'm not saying every single stock went down that day. We have had stocks go up tremendously even on the worst day, but I'm saying in general, the market. So it basically comes and retests these gaps. This shaded line is a gap. You can see that. It's very clear. Then it bottoms. It bottoms at the end of June. We're all hell supposed to break loose, right? The tariffs, the $200 billion tariff, the whole works. And guess what? The market goes on a run up. And look what the stows are doing as we speak. They are surging forward with an open, gaping mouth or lines, and on its way, in my opinion, of getting overbought. Now, if it suddenly starts doing this, I don't care what I feel. I'm going to take defensive positions. I'm going to short, and I'm going to basically make money if I see this starting to do this. So it's really as simple as that. Okay, you gotta follow, and a lot of the times I'm putting arrows here. It's so childish for me to do that, but again, we got a lot of traders like to be treated like big babies, right? So that's why I put arrows. But you just have to look at it yourself. Now, in the quad platform that I use, they use bar charts. I tend to see these candles shrink, expand a lot quicker, it's my opinion, than I see on Thinkorswim or other platforms. Okay? And I use all the platforms which are constantly showing different things, right? Investing.com, Thinkorswim, Quad, the Algo HFT charts. But these ones, for some reason, and I've mentioned this before, this is my opinion, are picking up some data from some exchanges which some of the other ones are not. And that is an advantage. When you have an edge on this market, even by 15 minutes, as an active trader, you're in to make some serious money. You know that. So that's it. Now, let me show you this is the slow stows. So the slow stows are the ones which are more of the swing type things. Now, the swing is not talking about days and days or weeks and weeks. It can happen within 24 to 72 hours, generally speaking, the resets. Now, this one, which is the fast stow, and I monitor this closely too. The fast stows tend to be they're fast stochastic. They tend to basically reset faster. Now, this is a daily chart that I'm showing you, so they match more the slow stows, but generally speaking, I'm using the 1 hour chart, which I'm going to show you in a minute. So at this point in time, I also look at the volume, but I really don't track volume on this. Volume is much easier to track on Thinkorswim because you can look at the ES volume pump up and down. Now, externals, I use the dotted yellow line, and this is my structure. Otherwise, it's just a naked chart, right, with the candles. The dotted yellow line is the pivot, very important. Below pivot, not good. Above pivot, good. It's a support or a resistance. I structure my charts. I show you the wide channel we're traveling in, and the upper end of the channel right now is showing us 283. Let me actually move on to the SPX. Okay, there we go. Now, where's the SPX daily? There you go. Bingo. This is your XPS daily, so we can talk some real numbers here. So at this point, I draw the lines. This automatically, I input the resistance lines. Those are automatically generated by by bar charts. So these lines I didn't, these are not mine. These are fixed. So the upper end of this is 28.22. It just happens to be very close to my rising wedge here. You can see that, right? 28.22. My one's 28.20, between 28.22 and 28.30. So on quad is matching what I'm showing you on Thinkorswim. That's pretty much where we're going before we hit a roadblock, before we have somewhat of a meaningful pullback. What's meaningful? A couple of 100 points. Now there's a gap fill here. That's why these are in shaded. Whenever it's a shaded box, that's a gap fill. Just in case some of you, didn't catch on to it yet. And there are mini gaps here. There's a mini gap here at 27.66, which also happens to be, I'm going to put that through, which also happens to be the downtrend line breakout. So let me put this down here. Now, some people who are not technically orientated, basically just rely on chasing prices up and down like wild monkeys or monkeys on hot tin roofs, MOHTR type of traders. To them, what I'm explaining, like, oh, well, yeah, it's all hogwash. Well, good. In that case, you should not be a tactical trader. You should just buy the alerts and just sit there. And when volatility hits, it hits the hardest and you don't understand what's going on, you're most probably going to sell at the worst possible time or buy at the worst possible time. And that's no good. So just trying to help you. So 1 second. Border. Okay, bingo. So so there's your minor gap here. That gap is 27.66, 27.69. Also happens to be a downtrend line. This is the downtrend line breakout that we generated on the 11th of on Wednesday, right there. Remember we fell Wednesday, and I was watching this, so it was tricky because but what we did was we retested the gap We retested this broken, downtrend line breakout. There's your downtrend line. That's why it's a red line. You know, if somebody doesn't understand what these lines are, uptrend lines and downtrend lines, please ask me and please seek help. Because if you don't understand uptrend lines and downtrend lines, I can understand sometimes, you know, non-technical orientated traders don't understand patterns, even though they should. Falling wedge, for example, very powerful pattern that I showed right off the bottom here of this major gap fill retest. Okay, they get a pass sometimes. They're okay, they don't understand some of the patterns, because I see patterns like the more you practice it, and any of you can do that, you start to see patterns before they occur, and that's the strength of a tactical trader, guys. Okay, ladies and gentlemen. So bottom line is that but if you don't understand downtrend lines and levels and resistances and supports, then you have a problem. I mean, a real problem. Okay, and you need to fix it, because these lines, the red lines, are support, and the green lines or white lines are resistances. That's it. So technically everything looks good for now. Short term, everything is short term. And at this point, this is surging forward. This is a daily on the S&P 500. This is telling me that we are going to, uptrend is intact. Simple. The uptrend is intact. And the uptrend basically most probably will go to a, there's a minor gap here too. 1 second. See, when you read the tea leaves like I do, and I'm not asking you guys to do it, that's my job, right? But you have to understand what I'm putting out there. And that's the purpose of these, of my tactical work. I'm not asking you to do, and some of you have great instincts too, to basically do my job, which is try to put some very accurate, helpful guidelines, roadmaps. But you need to understand when the roadmap is put there. If you can't read the GPS in a car, then what's the point of, you're not going to get there. It's really as simple as that, right? So what I'm trying to do is help people read these charts. Okay, so anyway, so there's gaps here. This is the dotted pivot line, downtrend lines, patterns. Sometimes when I see it, I show it, the falling wedge, tested this major gap, retested it right at the bottom, and I could only draw this wedge once this was created. This reversal hammer was created. Extremely volatile couple of days, no question about it. But we know what we're doing. Same thing, extremely volatile at this major gap at the 2700 level. That is a major support level, right? It breaks below that. We know where we can go down to. We're going to go down to 2768, which also happens to be a retest of this uptrend line, this blue uptrend lines. Uptrend lines are drawn in white or blue, just so you guys know, on the quad charts, all right? So far, so good. Internals are cooperating. Uptrend is intact towards the 28, basically somewhere in that 2812, 2830 level. So these charts are very predictive, and I'm watching them carefully. I start to see this turn around quickly. Sometimes it will come down, and that's why I have a line here I'm showing, where it can come and retest it like that. And all this I teach on ACS. I'm not going to go into it right now. It can retest this just like that, the 60 level or the 50 level, and bounce off there, just the way it did here. Okay, so it doesn't always have to do the full retest. When you get that full retest, that's the big boom, 300, 400, 500, 600 point type of drop. All right. So it doesn't have to always do that retest. So that's where the tricky part comes in, and I try to be as accurate as possible. Technical analysis in itself is not 100% accurate. Just the way fundamental analysis is certainly not 100% accurate when it comes to traders. And chasing prices is definitely not the way to go. Even though price momentum is extremely important too, but you have to mix it in with what you're seeing in front of you in the form of the charts. That's where you get the bang for your buck. So again, at one point, it's going to get up here. There's a major gap fill at 2854. You can see that right there, right? So maybe it does this, test the pivot, gets up here. But once it gets here, you can rest assured, high probability, we're going to get a nice substantial pullback of anywhere from 200 to to 300 points. When's that going to happen? Could happen as early as this week, to be honest with you. Or it could happen, yeah, 200 points is nothing. One bad tweet from Donald, boom, we'll be down 300 points. So as I'm showing these charts, you need to focus on them. And that's basically it. Now, the other thing that's going on here is I only use some very simple moving averages. I don't want to complicate, and I can put I can put every single one of these studies in there. Then the chart's going to look like a frigging jigsaw puzzle, and it's going to look like a Andy Warhol or Keith Haring painting, like all splotches of colors and stuff, or all kinds of things, right? But we don't want that. We want to keep it as clean as possible. And so I'm using the 5 SMA. I've always used the 5 SMA. I've used other SMAs too, but this works for me best. 5 simple moving average, the yellow line. I'm using for swing traders, I'm using the 34 and the 50. Now, one thing happened here, which is extremely positive, and that is the crossover of the 34 and the 50 that occurred back on where is the crossover? Oh, right there. Back on the 22nd of May. 22nd of May. Think about it, okay? So since 22nd of May, that crossover happened, which was a pivotal low, which was 2680. And since then, we have had massive swings up and down. But guess what? The two lines continue their merry journey forward. So a retest of the 34 and the 50, retest of this broken uptrend line is very, very viable. I mean, it's almost mandatory. It's going to happen. When you veer too much away from the moving averages, that means you are creating a standard. You're moving too fast, too quickly, so you're creating a skew on the standard deviation, right? So the further you move away, visually, you can see it. You are getting completely overbought. That's a standard deviation of almost +5. It's bound to reset, and it certainly resets. Now, the resets sometimes bounce off the moving averages, or they crash through it. Just the way it did here, right? But if you look at the overall picture using this particular thing, and I use Thinkorswim very extensively, it is still moving along fine. But a retest of the 2770 level, it's going to happen. And so 2770 from where we closed at 2801 is what, 30 points? 30 points, right? 30 handles on the SPX. That means roughly 210 points or so on the Dow. On the Dow Jones. So that's it. This will happen. Now, there's a little bit more room left here initially. Does it happen from here or does it happen from here? I have no idea. My signals will tell me. But it will happen, in my opinion. Maybe it doesn't. But as you can see here, this has been a pretty, this whole zone here, where we are right now, has been major resistance. And a lot of trap money would basically sell here because they just broke even again after months, right? Once you break out of that, by the way, it is going to be a very fast move. Don't sit around. Very fast move to cover this gap. Fill 2854, which is where the initial monster breakdown started in February. So that's it. Downtrend lines, gaps, pivots, certain patterns that I show, markers showing you what those inflection points are, slow stochastics moving crossover up, you want to be a buyer, slow stochastics crossover down, you want to be a seller or a shorter on the short side. These numbers that are projected on these lines, I show those, I basically click, I click and I say show prices to help people out. I don't want to put too many lines in there because then it just messes up the overall picture. And Key point is that you can see those lines. 28.54, 27.92 is the pivot. That's a major support, 28.77. Now, this is the one that we use extensively for our trading, right? Which is our hourly chart. That's your sort of bigger picture. And on the hourly chart right now, we have 28.60. Let me go SPX hourly. Daily, daily, daily. There you go. This chart is just, it's scary how accurate it is overall. Okay. Now, one of the things I noticed that we are starting to have a minor crossover down. That's why we bought the VXX lottos, which were down about 8% or 10% overall at the end of the day because the markets were so strong. This is a powerful surge forward. This is not signifying anything yet. However, if I do see that crossover develop on the 1 hour charts, you can rest assured that reset is coming quickly. Quickly. Each of these candles are 1 hour. And that retest of the uptrending 34 and the 50 comes into play on Friday's pivot, which is 27.93, which is expecting the market to go there, or 27.90, or the lower Bollinger. Oh, that's another thing I forgot to mention. The cloud cover here is basically the Bollinger Bands. So the lower Bollinger here is also the gap fill, which is 27.68. The 50 moving average on the 1 hour is 27.8261 right there. The uptrending 34 is at 27.90. So people who are scalping or even just monitoring their trades using what the keeping an eye on the market, these are great charts. These are great charts. We have a rising wedge. You can see that right there, the blue lines, right there. And those rising wedges generally tend to have a reset or this, which will happen, or this. Now, will that go all the way down here? No idea. We'll find out. Or will they come and test a pivot and then move forward? Or will the markets, which are right now, the futures are up, which really doesn't mean much, but still it's good, up 4, will they go up towards 28.15 short term right off the bat before they pull back? Possible. About each of these things, again, gap fills, markers. It's going to train your eye to look at these things. It doesn't happen in one day, I realize that, but it's not hard as I'm explaining it. So that's it, guys. I got a lot on my plate this weekend, and I'll see you guys tomorrow. And I'll take a question or two if you have any, or if you didn't understand anything I said, well, then in that case, guys are in trouble. But any questions, please? Sometimes I'll put actual text, say on the slow stows. I don't worry about the standard deviation thing yet, but generally speaking, it gets this. When things are starting to get really overbought, you get a very high standard deviation right there. See that? On the hourly chart, it was like 19 here. I mean, come on. I mean, at that point, even though the market surges forward a little bit, you're coming in for a nice fat landing. So this is another one, the momentum standard MSD. Forget what it's. I know it's basically the moving standard deviation chart that I just added, and then when it's on the low end, that means it's a buy. Obviously, that means the standard deviation has basically reset down to the basic lower levels, and you can see that clearly. All match. But the key thing is, don't worry about that here. Now this moves faster than the daily. Obviously, it's a 1 hour chart, but it's for trade. As traders, we benefit from it. Upper end of the Bollinger is at 28.10. So short term, that's maybe we got another 60 or 70 points before the market decides to pull back a little bit. All right. Too late to play Amazon Prime Day? I have no idea. Too late to play Amazon? I don't understand your question, Mike. Amazon could be up 300 points, 200 points, 150 points, or down 100 points. In fact, if Amazon drops 200 points, you better buy with hands down. Okay? So is it too late to try to play Amazon Prime Day? Oh, as in Prime Day, Prime is tomorrow. Yeah, I don't play stocks on Prime days. I showed Amazon at $3. They went to 20. Okay, the 1820 calls, which are expiring next week. So that's retail talk. No offense, man. Do we play Prime Day? Who gives a shit? Excuse my French. Whether we play Prime Day or not. You don't think it's baked into the stock? What, they're going to show like they did bazillion extra dollars? Maybe they did, but that's not my concern. I'm playing the Amazon charts, so I'm going to show you the Amazon chart. Okay? So sorry, Mike. I don't play Prime days or Goat days or Trump days or whatever. I play my charts. So at this point, Amazon, I've showed you guys. This has been one of my most accurate plays, and I want to slap myself personally for not having substantial positions in trading this beast. Overall, yes, I take profits along the way and I put small amounts and they get big, but I wish I really put in a big fat trade on it. When I'm showing you things that go up from $3 to $20 in 24 hours to 48 hours, for God's sakes, you guys better be in it, because most of you are not. So start thinking like a real trader, like a mechanical trader, and stop talking about Prime days. Seriously, change the way you trade the markets. So, because all other retail emotional traders are saying the same things. Hey, I'm going to buy Amazon because the Prime Day is going to be great. Who cares? So the bottom line is, because if they don't reach their highest expectation, just for the heck of it, they'll drop the stock 30 points. Fine. Technically, the stock is ripe for a quick pullback. Upper end of the Bollinger is 1833. This is the 1 hour chart. I trade this chart and I share it with you guys all the time. Okay, right there. This is how I trade. Here's your pivot. I see the candles very clearly. 2 p.m., tested pivot, 1785. This is where it started the day at 9 a.m. on the 12th. Told you guys to buy the 1820s. I can draw another line here, which can give me an idea where they Thanks, Lisa, for answering. We've played Amazon last week many times, not just the first time. So this is very accurate. We are in the uptrend zone here. This is the acceleration zone. What's the upper end of the acceleration zone? 1845. Do we think that the stock can get to 1845 right before earnings? Most probably it will. And once it gets there, it's going to stall. Now it goes to 1845. This is how I'm going to end this call. It goes to 1845 before earnings. Earnings come out, whatever. And don't try to be an analyst. I hate saying this, but stop being an analyst on Amazon earnings. Trust me. Many of you have tried and failed miserably, and I suggest you give that part up. Try to focus your mental synergies and energies on tactical charts instead of analyzing earnings. All right? And you know how wrong these analysts have been in so many stocks. Not even funny. So, saying all that, let's say this scenario plays out. This is game theory 1. Stock gets up to 1845, boom. Upper end of this beautiful channel. Okay? That's what the stock should have been trading, like that. Instead, it took a nice detour. Okay? And then went straight back on the uptrend channel. Goes to 1845. After hours, after earnings, the stock drops all the way down to the lower end of the channel, 1800. Everyone's panicking. Slips to 1798. Comes down and retests the breakout line, which was 1763. 1763. Okay? That was your breakout on the 12th. The 12th of last week. July. So it comes and retests 1763. Stop drops from 1845 to 1763, which is the retest of the breakout. How much of a drop is that? 82 points. 82 points. All right, 82 divided by 1845. It drops 4.5% on earnings. Everyone's like, oh my God, it's just over. Amazon's dominance, hegemony over all industries is over. All it's doing, guys, it's testing the breakout. And you want to, overall, from a technical standpoint, this slow stove, look how powerful it is, just keeps on going and stays above 80. That will, by that time, reset down here. It's not mandatory. I'm just giving you a scenario. You want to be a pretty aggressive buyer at this level. And there also happens to be, if you focus your eyes that God has given us, there is a gap here, which is roughly 1756 to 1762. So is it possible that Amazon moves up to the upper end of the channel and then comes down here, tries to hold 1800 because it's psychologically and technically where the low channel is, and then breaks down, tests the pivot, tries to hold that, see you later, doesn't, and then goes straight down. And this will happen very fast. Very fast. It can happen overnight or it can happen the morning after the earnings. Test this gap, which you want to be a significant buyer. What else is happening at this gap? There is a 50 moving average, not 50-day. This is the 1 hour chart. And there is also the 34 here at this level. Both are, one second. Let me clean this up. Right there, right? 1763 is a gap fill and a retest of the 34. This is how technical traders trade. It's not that hard. They start seeing these things. And when I'm showing these things, you better understand and tell your brain cells, hey, that's how he's reading it, and you need to understand what I'm showing you. Because I write it in plain English most of the times, and some of you seem to have difficulty in understanding plain English. Some members said, what do you mean by that? I said, what do I mean by that? I just wrote it in plain English. Unless you want me to write it in Swahili or, in Ukrainian or, in Mandarin Chinese, just go to Google Translate and I'll just maybe put some Mandarin Chinese and some, Russian in there. How about that? Plain English, guys, seriously. But I can't explain everything long-winded. I want to keep this so it's timely alerts. So here's a gap here, 1763. Amazon could do that. It could drop 80 points. So the best way to play Amazon is a straddle. Now, if things go berserk on Amazon and they just blow away all expectations, then in that case, the 1 hour chart won't do justice. We have to switch to a daily. I normally don't do dailies on this because there's a lot of information on that, right? On the daily, it is looking like, these are all markers from the 1 hour charts. On the daily, this is what Amazon's looking like. This was your cup. It didn't even create a handle. It just wanted to just break out. The upper end of the automated resistance, R3, is 1845. That also happens to be my channel top. Whoopee! We just created magic. See this channel? On the hourly, I just showed it to you. It also happens to be the upper end of this resistance. Now, all this is very strong. Okay? So if Amazon really wants to bust a move, it's going to go straight up here. Where? It's going to go to 1900 plus. Now, I can show you by drawing another line. One second. Let me move all this stuff. These are all accumulated drawings from way back, right? So I'm just going to try to show you this. The broad channel on Amazon. All right, guys, get ready. Let's take some lines out here. There. Okay, so let's do this. Now, I'm not going to go there. I'm going to go back when Amazon basically went down hard. Oops. What am I doing? Hold on. Imagine I do this on real time for you guys, and when my system is getting overlogged, even though I'm running 25 gigs of RAM on each of these computers. It's not that easy to draw these things on the midst of a fast-moving market. So appreciate what I do, guys, all right? Now it's easy because there's no data feed going on, right? Now it's just like, okay, everything's quiet. But in a live market, it takes me much longer, and yet I still deliver on time. let's see what this, I haven't done this on this one before on the daily, so this is the first time I'm doing it. So let's see, guys. So there. So that's your daily wide channel from the lows of Amazon back on the 9th of February of $1,267. Guess what? Lo and behold, it's still the 1845 level. We just identified a major level where the stock's going to hit a road bump. Now, if it breaks out of it, then we are looking at, then there's another way to measure it. Can somebody tell me how? What's the cup and handle measure? I've explained this before. Maybe some of you remember. I'd be very impressed if some of you remembered. So somebody speak up, please. When you have a cup, how do you measure? Just one of the ways to do it. How far something can move when you have a cup breakout, cup and handle breakout. Yes? No? Can somebody speak up or no? Or, MB, what is top? And next time, please, I highly demand this. Everyone have a mic and a headset because it takes me too much energy to look at the dialogue box on GoToMeeting and see what you guys are writing. So please have some mercy on me and get a mic and a headset. It costs about 20-some bucks from Amazon or your Best Buy. Get a Logitech one. Put it on your head so you can directly say things. It's the least I can ask from you guys, honestly. So from the bottom to the top. Yes. So Mary Beth is correct. Congratulations. Well, most of you are like scratching your heads. What's he talking about? Very, very good. Thank you. All right. So here's your top of the cup. And this is the same thing as a range breakout, guys. All right. So here's the top of the cup, and it's showing you how much? Where the breakout happened? 1765. What's the bottom of the cup? 1650. 1650 and 1766, right? So that's 116 points. Am I correct? No mic on iPad. What do you mean no mic on iPad? Just wear a headset. You just plug it in. I don't know. Don't worry about it, Mary Beth. Okay. You know what I'm talking about. Just wear your Apple headset. You can talk through it. Okay. So 1765, 1646. So 16, let's call it 1646, 1755. 1 second. That's 109 points. Let's call it 110 points. So add 110, as Mary Beth correctly pointed out, to 1765. Let's see what we arrive at. 1875. 1875, which also happens to be, this is how beautiful technical analysis is, the upper end of this range, right there. So I'm going to draw a line here, right there. That's your upper channel of this wide channel. Put a price here, 1878. Good enough. Or 18 to 40. But the cup and handle breakout is telling us roughly max move 1875. If it busts past that, then we are looking at an upper end of 1931. See that? On the daily? On the daily, you're looking at 1852, but if it moves up, busts a move, then you're looking at 1920. Whatever the case, the cup and handle breakout is showing us 1875, which is right there. We shall see. Have a great evening, everyone. God bless you all. Get ready for a busy week. You don't have to do every trade, but be involved. That's all I ask. Not for me, for you. And it's going to be volatile. We're going to get a lot of tweets coming out of there. Donald's going to pull some Wild stuff coming out of Helsinki. He's meeting at 6 a.m. this morning, our time, with good old Putin, Vladimir Putin. Okay. I think it's overall good that they're talking. Look, the Russians did a lot of funky stuff. It's a given. So the key is we don't want to necessarily denigrate our allies who have fought with us on wars and died next to us on recent wars. Okay, Afghanistan, and they've helped us with special combat missions to take out the bad guys all over the world. We don't want to denigrate them. All right, seriously, and say that good old the Russian Secret Service is going to help us. They're not, but neither are they here to demolish us. Putin only has one mission. He wants the sanctions to be thrown out, and he wants to just basically, because those are hurting the Russian economy. So he's looking for best for Russia. That's why he's doing what he's doing. He's trying to create a rift between the allies in order to benefit from the United States. So maybe it'll backfire, maybe it won't. I'm not here to judge that. Okay? But anyway, that's it. That's a whole different story. The key is we're going to be busy with the earnings. Let's stay involved. I hope this tonight's session gave you a better understanding on the thing. I have videos on the YouTube channel explaining the quad and how to read these charts. Here's Nflx, for example. Big wide gap here. We have traded the stocks tremendously. These downgrades are now coming into this big gap fill around 386 on the hourly. On the daily, this is what the stock looks like. Okay. Which is showing us that it's got a big, ugly red candle. But that ugly red candle is almost there at the 390, 386 level, right there. So regardless of if you're just chasing prices and not looking at these charts, you have no frigging idea what the stock is going to do. And when I'm posting the charts, maybe you don't understand what thing is. This is a major key support level right there, lower Bollinger, 381, and that can happen in 2 seconds on earnings on Monday night. And I want that to happen, to be honest with you. Best way is to play a straddle. If it breaks this, then short it to Kingdom Come all the way down to the major breakout that occurred on, and we were there at that time, the 23rd of May, right there, 23rd of May, right there. Big bullish engulfing candle breakout of this ascending triangle. Remember that, guys? People who traded it, they remember. People who didn't, what do they care, right? They just missed out another killer trade. Remember, what you miss out on is what you're losing on by not making it. You got to start thinking like that. I keep on telling myself that all the time. There is no next time. There is only the time that's directly in front of you. So if you think there's going to be, again, I keep on repeating it, but it's a fact. You think it's going to be like that perfect time. There are so many perfect times in so many things. Yet I don't see many people really buy those perfect moments, which are those tactical lows. Short-term stochastics are getting very oversold, starting to get oversold. This one, despite this very large drop, has just started the crossover down. Will it retest all the way down here? If it does that, then Nflx most probably will come and retest that June 13th breakout right there. You can see that, okay, which is 370, or it's going to test 340. 340 would be a screaming buying opportunity for the stock. 340. Otherwise, it's going to just test this major support level, which you can see here. I hope everyone can see right there. Major support level, 378. 378, just like that. And it's just going to go bang right there, because that will create a W formation. Breaks that W, then you got different levels to deal with. There's one level here, 370. You can see that. That's the June 13th breakout. And then the big breakout was right here in the 340 level. Either that or it'll do this. And if it does this, I can assure you the short squeeze is going to be so frigging enormous. It's going to break out like a, you know what. And it's going to literally chop the heads out of the shorts who think that now. I don't have an idea what exactly is due, even though I believe Nflx on any dip is a screaming buy. Literally, their potential addressable market that they're attacking in India primarily is so large it dwarfs the US. And they're big in that. And secondly, Reed Hastings, the founder and CEO of Netflix, do you really want to keep on messing with that guy based on some analyst recommendation and what you think or I think? I don't think so. Unless their growth trajectory is really slowing down, the stock is a buy. If they hint that their growth trajectory is starting to slow down, then the stock becomes a nice short. But we know what those levels are, and I just showed it to you. So the upper end of this level is, this is how you trade these quad charts, right there, 460, 460, right there, right? Look, comes, does this. After hours, there's going to be back and forth. Does this, let's say it drops to 380, conference call starts, they start throwing out some metrics, and the stock basically then does this. Boom. All this is going to happen very fast. But this is the upper end of the range. Don't forget that some of the smartest analysts have a $500+ price target on them. And the guy who downgraded the stock, the UBS guy, actually raised the price target by $30, but put the stock on neutral. Games that Wall Street plays. That's it, guys. Told you a lot of good stuff today, okay? That's how you trade charts, not prime days, not the news out there. Trade the charts. Have a great evening. You guys are the best. God bless you all.